Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 20th of May, 2020. This is episode number 1759. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a market that's allocating to risk versus yesterday's settlement were higher across the board on the indices. Crude oil is leading the pack, up 2.32%, trading at 32.70 in the July contract, up 74 cents. The Russell leading the indices complex, up 20.2 points, trading at 1327.7, up 1.54%. The Dow's up 295 points. The S&P is up 35 points, 1.2%, and the Nasdaq is up 106 and a quarter. Remember, the Nasdaq's been a leader and has really dragged the market up. We see the tech and the comm services sectors really pushing higher over the last couple of weeks, and now the Nasdaq is up, but is the weakest of the bunch. So that's where we stand. The laggard today is a cable trading at 122.65, and the U.S. dollar is back down below 100 at $99.29. The bonds are up 2 ticks, and the 10 years are unchanged. So that's where we stand this morning. In terms of what's ahead on the calendar, we had quite a few numbers this morning. I'm not going to go through them. It's not a good use of everyone's time. You can pull up a calendar and see what's already happened. We do have Eurozone consumer confidence flash for May, expecting negative 26. Consensus is negative 24. That's at 10 at 10:30 Eastern. We have crude oil inventories. The consensus is for 1.151 million. So the numbers are coming back to what seem like normal levels, 1.151 million. The prior is a draw of 745,000 barrels. Again, the numbers appear to be moving in a direction that is normal. And so that's where we stand. Cushing's getting a draw, and so that's where we stand. We do get the FOMC minutes. These have been a mover. That happens at 2 o'clock Eastern, so pay attention to that. And then balance trade out of Japan at 7:50 p.m. Eastern, expecting a deficit of 560 billion yen, forecast for 480 billion yen. That's where it stands. The ECB has its non-monetary policy meeting at some point today. Let's move on to what we've got in terms of yesterday's expectations. The primary expectation yesterday, I talked about 39.75, 39.50 being a key dividing line. Unfortunately, the market opened right around it and created a point of control in that area. But overall, the key expectation was that 29.49, 29.50 was likely to close the door on buyers on a push up. I expected an initial push up, expected buyers, sellers to shut the door at 29.50, and then I was looking for the market to move down, consolidate at 31. 31.32, the overnight low and the stock zone, and then eventually move into this naked point of control and composite point of control at 29.19, if you recall. And I said if it makes it through there, then we're looking at 29.07 before the bounce. If not, then we are likely to push through to 28.86 on acceleration, given the fact that we have this gap zone. I did expect an acceleration down, but of course we have the gap mid to contend with. So the primary scenario is a push up initially to about 29.50, get held up at 29.32 or so, 31.32, and then on break push through to 29.19.20. And then squeeze all the way down to 29.07.75 before the bounce. Here's what actually happened. We open up right on top of that number, 39.75, right on top of it. So we open right above the low volume node right here from the prior day. We have an open auction in range out of value, and the expectation is it would likely push up. Remember, open auction, push up to 50, push down to 30, to around 30, right? That's what I just talked about. And then release for a quick push into 1920. And as that doesn't hold, we are likely to push down into 2907 before the bounce. That's scenario one from yesterday. And what it did, though, is it pushed down into, it didn't take much of a lift, and it pushed down into the 3175, which gives us that near 30 area. And then we get this impulse up, which kind of throws a wrench in scenario one. It looks like scenario two, so we're looking for a pullback for the bounce. And in that situation on scenario two, here's scenario two, it's in the pink here, or whatever this color is, pushing into 62.50 and then ending up at 78. That's scenario two. So as this push occurred, I was looking for it. Okay, all right, this is not behaving the way I expected. I'm looking for scenario two, and this was just a chop fest here. It breaks through the mid down into the open, gets back above, extends the IB high higher, pulls back to the mid, extends the IB high a little bit more, and then we get this real selling. So now scenario one is back on track. So what are we looking for? We're looking for mid VWAP, the opening swing high area to hold. It held for about 3-4 minutes, and then it shoved itself back. This is news, by the way, right here. This was Fed's. I forget who talked. I think it was Fed's Powell or somebody. And then it pushes back to the IB, essentially coming back to the scene of the crime right here, comes back to the scene of the crime, and then we get scenario one kind of working its magic. We end up pushing through the overnight stat, and we end up with a neutral extreme down day. And so we have a break of the IB high, a break of the IB low that puts us in neutral in terms of a day. This could be, in other words, this is a caution that this may be a reversal day, a topping and reversal day. And then when it starts to run into the close to the bottom, this is called a neutral extreme. And we're expecting, of course, as you have been here for a while, we're expecting a continuation overnight. Okay, so we expect the overnight low to be extended lower. That's what we're looking for. And it did extend lower, but, sounding like Kudlow, but it took a bid, and we started to push all the way back up. And look at the overnight point of control, 29.51, above yesterday's point of control, above 29.50. So just quite amazing move there. There's a lot of ground that was covered here from 2908 to 2951. We have 43 points to the point of control, and we have about 50 points in the overnight session, which is very wide. It is second standard deviation range for the overnight session, which makes it a very, very active session indeed. So here's the overnight and what it looked like. We open up and we squeeze lower as we would normally expect. We get to the low, and then from there we start to drift up, which is relatively normal. I would expect 29.38 to shut the door here. 29.38, and there it is. 29.38. Ooh, that's a fairly straight line. I'm getting good with this mouse. 29.38 to shut the door here, and it did. This would be my first area to look to get short if I was trading overnight. Rotates down to 29, approximately 8 points. 8.5 points or so, and then it starts to squeeze through. So what we have here is an impulse continuation, another opportunity for a short, but it holds the mid. It gets to the mid of the overnight session to the tick, and then with the European Open, cash open right here, this big bar, the Europeans start pushing higher, and what we have a squeeze that gives us a profile that is top weighted and is highly contested. And so what we have here is something that looks very much the opposite of what we would expect on a neutral extreme down day on a recent top. If we have a recent top and we get a neutral extreme down, technically, for anybody that's done market profile for a while, technically we expect to start looking to the short side. Okay, we expect to start looking to the short side. We have a lower high, and we're expecting to start one time framing down, and then that's when we immediately start looking for we start to immediately look for what are the big test areas below. So now we're looking, normally we would look for high volume areas or MC points of control below, and those would be the key target on a swing basis or multi-day basis. That's the normal behavior. But what we have today is the market pushing back up, decent volume, 306,000 overnight, but the range is very wide. And so price discovery is very active. The market is absorbing some good news here from somewhere. So this is what we have. We have a weak high with a point of control near highs, and so it is likely to challenge this 29.58 high from yesterday. That's the context of what we're coming into today, folks. So let's take it over to the weather forecast. No, let's take it over to Bookmap. Here's what the order flow looks like. These dots are blue and red based on the delta, and those represent large prints, and if they coincide with hot areas, red, orange, yellow areas, those are called collisions. The bottom here, this is not volume, this is delta. These bars here are delta, so it's an indication of which direction the market is going in. Here's the open, the 5 o'clock open Chicago time when the session, the new session starts, today's session. And you can see here we're dropping, pushing back up to the open, dropping again, and it's just ripping higher and higher and higher. And you can see that there's really nothing in its way. There's not much in terms of order flow at this point until we get to this kind of 1 o'clock. This is when the European markets start to open. This is when the Bund opens. And so, we start to then look for more serious volume, more serious activity to start. Generally, the Asian session is relatively quiet. The European session has more activity in it. And these guys are lifting. They're lifting. Look at this, the CVD taking a pop higher. They're really lifting, and they're pushing through. They're pushing through the liquidity that's present there, 29.50. Liquidity is very likely to be there very often. Liquidity is going to show up at the mid-century figure. These are large option strikes, and the futures are used to hedge option delta very often or to protect option positions. And so we often find liquidity at these prices. Futures options also have key strikes at 5 points, every 5 points. So here's 55, and you can see there's liquidity there, and that's traded out. And then we're moving into the 60, 59, 60, which is yesterday's high a day. And here we are challenging, essentially challenging yesterday's high a day right up here, right? Yesterday's high a day is 58.50. The prior day, Monday, was 64.75. So yesterday we actually had a lower high, lower low, but we had a higher point of control or a point of control that's in line. So in price action, we had a market that's saying, yo, this is weak sellers, right? Lower high, lower low on the daily, okay, with a finish at the low. The volume and value is saying, actually, we like we like that 2950 area, and that's why they put yesterday's prior point of control right here at 4850, which was just a little bit higher than the one from the day before, which is around 2946.75. 2946.75. So value actually held, the point of control actually held higher prices. The markets accepted higher prices, but the price action it was for sellers. And so what's going on here is the market has come all the way back to value. That's essentially what it did. And this, my friends, is a short squeeze when that happens. Okay, so let's look at what's above. So we know that yesterday's high is going to have a lot of liquidity in it, and that liquidity is likely to trade out. Um, that liquidity is likely to trade out above there. We have a stock zone and a gap zone into 2970. So 2957.50 through 60, heavily offered, relatively heavily offered. Above there, 2970. And then once we get through the 2970, remember yesterday the target was 2978.84. And 85 has a little bit of liquidity in it right here, but then 90 is the next key area, and we are walking ourselves towards 3,000, right? Despite what everybody thinks, this thing is heading that way. Okay, so let's take a look at what's expected for today. That's the review segment, and we're over it. For today, what do we have? Boing, 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 boing. For today, here we're opening above. Yes, the prior. This is what I was talking about. The prior day's point of control right here. This maroon line. Yesterday's point of control right above it, and today's overnight point of control right above that. And we are trading above that. This is a short squeeze. Okay, so this morning, looking for an open auction. There's overhead as I showed in the on the offer in the heat map. There's a lot of overhead. Yes, at the prior day's high. I'm expecting the market to be responsive down into this point of control, consolidate down here, and then I'm looking for at some point for it to squeeze and push. What we're likely to see is a spike through this 2960 area, heading for 2947, 2964.75. And then from there, we are likely to push into 78 and 84 before we rest, assuming the range is relatively normal. That gives us a range of about 2940 to 2978 or so, a pretty decent range. That's what I'm looking for today. If it fails today to accomplish this, we are very likely to see some long liquidation and a flush. Secondary, open, test higher, get the spike, push that 65. We will have taken out the overnight stat and then consolidate here at the 71. This is a relatively thick area, a little bit of confluence, and then fall back into the open and then start to squeeze these overnight buyers, the 300,000 contracts that have traded plus on the long side, and then start to move back towards this point, the MC point of control, and bring us back in line with that, back to the 20 area before the bounce. So very contrasting ideas. Why do we have such contrasting ideas? What kind of crap is this? The market might move up or the market might move down. Duh. Here's the thing. When you have a structure like this and you have a big gap, and the gap is highly discovered. So you look at this profile and it's highly discovered, right? There's a fight going on here. The sellers have an incentive to sell and the buyers have an incentive to buy. When things end up shaking out. One of these sides is going to lose, and they generally lose big. And so I'm looking for that kind of action because I'm looking at the continuation of this active price discovery to continue, and therefore we get these opposing ideas. My job is to wait and see which side is actually losing, which side is gaining a hand, and I do that by looking at where we are, what we've tested, what key areas have we tested. For example, if we take out the 58.50, yesterday's high, and we end up with lackluster buying above there, that's a decent scalp short that can be added to. In my opinion, it's not a recommendation to trade, but that's a pretty decent indication that all of this effort to get to yesterday's high didn't bear fruit. And so a bunch of people are going to see that weakness and they're going to want to sell their position and therefore help the short side. So it starts with a scalp, and if we get an impulse down, a large move down, which right now an impulse is about, I believe, 13 points. If we get a 13-point move without a pullback, then I'm looking for a continuation. If we get the continuation, then we easily are looking at yesterday's value low at 37.50 from the 60 area. That's pretty good range. And then if that doesn't hold, then we are likely to get 29.20. 29.20, and what you have there is scenario 2. And same with the other side. If we push through the 58.50 and we get more buying and it's held bid above there, then the 64.75 becomes the next key test area. If it takes out the 64.75, a bunch of shorts are going to get squeezed. That placed a bet right here from 38 down yesterday, or 43 down yesterday. A whole bunch of those people are going to likely to get squeezed, and that's going to likely fuel us into 71, 78, potentially 84. Just think of it like it's a tug of war, and if something really big happens, if you lose one of your big players, then the rope is likely to move very rapidly in the opposite direction, right? And so, or in that direction. And so, that's the kind of the same idea here. This is an auction. This is people discovering prices in both directions. Think of the market that way. Don't think of it as a moving average or a fib. You can superimpose those to find your locations, but understand the auction. That's what these trader bites are about. Good luck, and I'll catch you tomorrow morning. Take care.